Live from Studio 17 of the Barclay Pierce Capitals headquarters here in Sydney, it's the Theory of Thing Investment Podcast. I am your host, James Whelan. I should be looking at that camera, not that camera. I am your host, James Whelan. I'm Managing Director of Barclay Pierce Capital's Wealth Management Team. Gee, there's a lot of words there. I've got the fake glasses on today for the screen glare to show just how incredibly intelligent I am and how I am looking forward to telling you all of the news that you need to hear. Up to date. My co-host on this amazing adventure is none other than Heath Moss from HLM Investments in South Australia, providing quality advice at the right price. Heath, how are you?
Very well, thanks, mate. Very well. We finally here in South Australia, whilst the rest of the country's been getting it in plentifully, we finally got some rain here in South Australia. It's been months.
Have you been parched?
It has been months. I've got a lake or river, sort of man-made river in our estate near my house, and that thing has been bone dry. Yeah, wakey.
Thanks very much for everything that you've done. That's been Wellnex holding at 3.1 cents as well. That's
beautiful.
That's how that goes.
Beautiful.
Yeah.
So that's been bone dry, and yesterday morning and today we get about 10 mils each day. So yeah, it's good. It's good. I was up cleaning the gutters the other day.
I saw your photo cleaning the gutters. Look at you with the manual labour. Look at you with the manual labour. Can I pull a photo? Do you want to pull the photo?
Oh, if you have to.
No, I'll see what I can do. But yeah, it's extraordinary.
It was so dry. It was so dry. I thought I better get up there and check them. They were chockers full of gum leaves and whatnot. I mean, the council's got these massive gum trees so close to our house that they get chockers full of things at the best of times. But being so dry, oh god, it was an effort to get them out. But they're all cleared and all good. So that was my manual labour for the month. So but apart from that, it's been good. Yeah, you're gonna share it, are you? You're going to show the world how rubby I was looking.
I don't know if I'm sharing. Is that right? How's it going? Now, special guest on the show is someone who's just walked in. Is what I've just been joined. Here by. That's a beautiful photo, mate. Yeah, clean the gutters. It's great. Look, we're going to get into your market wrap in just a second. Special guest here is Jai Ayoub. He doesn't have a headphone on, so he's not going to be able to hear anything that you ask. Maybe you come in so that people can see you in the camera there. Sure. All right, nice and close. Now, Jai and I work together very closely, almost always this close together. We travel around with regards to the road shows that we prepare and various company stuff. We've got something that's pretty exciting that's coming up, Jai. Why don't you run us through it? Big words.
The Australian Investment Summit.
The Australian Investment Summit.
Talk us through it. Taking place in London on the 10th of July.
Mm-hmm.
And that is holistically planned to create opportunities for Australian companies to showcase what they're about, tell their story to a wide range of UK investors, brokers, high net worths, family offices. Hosted this year at the London Stock Exchange event space, which will be fantastic.
Yep.
And yeah, it's basically a number of companies here in Australia that have intentions of listing or will be listed by that time in London.
That's great. So for any more information,
Australian Investment Summit.
Google Australian Investment Summit.
Yeah.
And look, I've already got a few people that are going to be heading over. I think I've had to bail on this one. I was planning to go. I think I've just got to mind the fort here while you guys get to go over and go and do that.
It's going to be a good fun week. Wednesday's the main day, but Monday through Friday will be private meetings for the companies. It's basically like them on a little bit of a mini roadshow tour. With the conference at the front and center of it, a really good presentation space, a good opportunity to yell at 100 investors who may not know about them, be invested in them, or it educates everybody internally about the dynamic between Australian companies into London.
Yeah, and I've been getting more and more feedback. I've been in this industry for quite a while, long enough for me to be able to have this sort of opinion that I have found that dealing with London a lot more effective and a lot more efficient than it has been dealing with the ASX. Now, I'm not denigrating the ASX. I'm just saying it's a comparison between two things. Companies have come to me and said, I would rather pursue a London listing as opposed to an ASX listing at this current time. And that's me being very diplomatic, but also with the experience that I've got in the market to just say, there's things that you can do in Australia and things that you can't, and there's things that you can do in London. And I think that's where the direction for a lot of our companies
The London Stock Exchange has been so supportive, super proactive about obtaining these companies. They obviously want them on their boards, but they're going over and above to make sure that we're comfortable, that the investors are comfortable, that the companies are comfortable, and everyone understands that the process involved is a supported one by the main board.
Excellent. All right.
That's it.
The Australian Investment Summit. Check it out. It's in about a month's time.
10th of July.
10th of July. Fantastic. Okay. Thanks, mate. Good on you.
Thank you.
I'll talk to you soon.
Yep.
All right. Hey, there you go. A nice little bit. It is going to be great, and it's the decision had to be made about if I was going to go, and it was just like I've just got too much to do here building this business back up. So that's how that goes.
Can't do everything.
Yeah. Now, mate, as beautiful as you look with working down the coal mines, getting the black lung, with cleaning the gutters, it's great that you've got rain. And I was talking to someone from Perth who came over because I've just spent the last 2 days in Brisbane at the Australian Investment Summit. Funny thing about Queenslanders, isn't it? I mean, I first off, they've all got too much money. Brisbane people have got too much money. They should not have given those people money. But they're all great. They're fantastic. We had a couple of forexes in the afternoon yesterday, which was good. Talking to a bunch of guys in the mining space, providing drills, oil and gas, sort of guys like that. Not our sweet spot, oil and gas, but it's always good just to stay in the loop with those guys. So it was quite effective. But think about Queenslanders. Any government, they always start the conference with a government minister or someone like that who's sort of giving the keynote opening address. It's like must be mandated by law in Queensland that you have to talk about how great the weather is in Queensland for the first 5 or 6 minutes of your speech. It's like we know it's in the ads. Hey, anyone here from Melbourne? Hey, how does this weather look? Huh? And it's just like, yeah, man, we know.
Yeah,
we'd work here if we could, but we can't. That's how it goes, man. Anyway, and then it rained that afternoon too, so it's just like ha ha ha. Just because it's sunny in the morning. Anyway, it was a fantastic conference. Oh, I got some stats for you. You're gonna love this.
Go for it.
So, so the CEO, and I want to get her on the show next week, Rebecca Tompkinson, who's the CEO of the West Australian Mineral and Energy Chamber of Mineral and Energy. That's a mouthful. I'm sorry about that. She spoke and she gave some stats about. And I was furiously trying to write it down. I actually had to ask her to say it again so that I could get it down. I don't have my notes here with me, but I've got them offhand. That the West Australian government has got plans in place to. Okay, I'm going to go for this again. The West Australian government has got plans in place to create about 200 gigawatts of energy of power by using wind. That's their wind area. The hydrogen. Wow. They've got a hydrogen plan on top of that as well for another 150 gigs. I think that's on there. 350 gigs of power to be generated all up. Now she gave us the stats. Now we know that that's going to take a lot of things to be able to do. A lot of copper, a lot of steel, a lot of all the stuff that you need, right? Okay, to make those turbines. And then she went further into it. She said it's not just that. We know all those things. If you put it into more perspective, each gigawatt requires 170 turbines to create that gigawatt of power, right? I think I wrote this down correctly. Each turbine, so that's 170 turbines to create 1 gigawatt of power. Each turbine requires 12 escorted truck trips. So that's, the big long trucks, and they've got the car in front, the car behind, because they're carrying the part of the turbine that they have to go.
Yep.
You need 12 of those for each turbine. And then here's the kicker. So yes, that's escorted, and that's stopping roads, moving power lines because it's taller than power lines. That's the logistics of one of those trips is a nightmare. You need 12 for each one.
I've seen one of them transported onto the York Peninsula here in South Australia. It's they're massive.
They're grand things.
Yeah, and turning corners is not an easy thing with these bloody things.
That is correct. So then she put the numbers. It's just like, so with all of that to generate all of just West Australia's energy requirements to create the gigawatts that they're trying to create, she said you need 306,000 escorted truck movements. So that when you put it into those sorts of terms, you're just like, that's not something that is going to be. It sounds ludicrous. If it doesn't sound possible. I'm sorry to say.
No, and
go.
Also, I mean, when you're thinking about things and we talk about the how wind is emission free, etc., but those truck trips, they're all on diesel. They're all emitting something. People don't put that into their calculations when they're saying, these things are putting up an emission free. Well, they're actually not, because the steel to make them, the truck trips, etc. They all emit something.
They've all got to be factored in. That's right.
Yeah. So,
or you could, you could spend 10 years and build a nuclear reactor and have yourself covered for all of that.
I'm happy with that.
Yeah, I would be too.
Yeah.
But, the sensible people are not here for that sort of thing. So that's how that goes. Mate, market wrap, and we're sponsors of the Rhinos football team. So we're just having a little lunch, a sponsorship lunch for them later on. So let's get cracking. Good on the Rhinos as well. They're a good team. We like sponsoring them. Okay, what do you got?
Beautiful. Let's get going. You pushing the buttons.
I'll show you the thing. I've got the buttons.
Yeah, beautiful.
Okay.
Beautiful. SPX is on the screen. A bit of a soft week. We're down about 1.3% on the S&P 500 since last Friday. 1.4 on the NASDAQ, which is just there. Not much. I mean, we're down a little bit. We're only 1.5% off our highs, so it's really nothing to speak of. Market taking a bit of a breather. There's the XJO. We're about off with today's bounce. We're about off 0.5%. So we've outperformed the US markets this week, but the US markets did have a public holiday on Monday for Memorial Day. Okay, so why are we off this week? Well, really, macro-wise, it was quiet until tonight. We've got the PCE, core PCE coming out tonight. The big one. The Fed looks at really, really closely. That's supposed to come in at 2.8%, same as last month. So, it'll be interesting to see how that goes. But the yields did sort of climb higher during the week. If I bring up the 10-year, where is the 10-year?
Yeah, the 10-year.
We've seen a climb there, and that's really on the back of there was some very large government auctions of bonds over in the US. They were soft. Market wanted higher term premium. It was about 2 to 3 bips, I think, higher than what was on offer in the auctions. So they're a little bit soft. So the market bonds were sold off, yields were bid up, and therefore the equities were sold off. And that's about all I've got for you in terms of why equities were sold off. We really didn't get any other macro data.
We're at the world. And nobody cares about anything until the PCE data drops tonight. So this week was a moot week.
And we had a few Fed speakers come out. Most of them towed the line. We're data dependent. We need to see more data, probably higher for longer. Except for Williams last night. Williams came out and was dovish. Basically said, I think rate cuts are on the card. Oh, actually, sorry, there was one bit of data last night. US GDP, their second reading, because how they do their second reading, came at 1.3% for the year on year. 1.6 was expected, and that's down from the expectation of 2.2% the first time around. So it was quite weak. What saw it come down was personal consumption. That was down from 2% to 1.5% versus the last read. So whilst it was still higher than the overall GDP read, it was still weaker. So things looking a little bit softer over in the US, which I think would make the Fed happy because, that's what these rates are intended to do, cool things off. So after copper's large run...
I said don't charge into copper. I called that correctly. Chris Joy, 2 thumbs right here.
Beautiful.
Mate,
so we got... copper.
Oh, actually, I'm going to pull up Rob Rennie. Rob Rennie made a great note about it. So you talk about that, and I'm going to show you Rob Rennie's note in LinkedIn.
I think I know the chart you're going to talk about, but we saw copper peak over $5 a pound the other week. It's since come off after a 40% rise. You can only expect some of that to come off on the back of maybe some weaker or softer than expected Chinese data, softer than expected US data, etc. And overall, just a massive run there from copper this year. What are we? What else? What are we? About 467. I reckon it'll settle. It'll come back to that trend line around 450 to 460 and hold there and continue its on its merry way. But it did need a breather. What's your Rob Rennie chart?
Yeah, it's where am I looking here? Hang on, present, share screen. Robert Rennie in LinkedIn. Okay, just one of the many charts that have kept me from showing any interest in copper above the $10,000 to $11,000 levels. So the SHFE on warrant copper inventory, if you look at the right side of that chart, 2004 inventories are way higher than they would usually be at this particular time of the year in previous years. Well, and so 2019 to 2023 average, this particular time in the inventory would be 150 kilotons. Currently 300 kilotons. That's a lot. It's outside the standard deviations. Westpac, well done. That is a chart to end them all. That is just absolutely brilliant.
Inventories are really, really high in China at the moment, seasonally high and overly historically high. Around the rest of the world, like the LME and that, they're at record lows. But it sort of does raise questions. Why are China doing this? Are they preparing for, a big investment in their own property sector, or are they hoarding strategically? The Chinese have been well known to build these strategic reserves in certain commodities. They've done it for uranium for a long time. They've got over 500 million pounds in strategic reserves. Oil, they have 1 billion barrels of oil in strategic reserves. And now that you've also actually, Scuddy also tweeted inventories on iron ore are well up on seasonal averages as well. So are they building strategic reserves like they have in other commodities for whatever reason? Or there is there something else behind
show me natural gas.
Nat gas. Let's have a look.
Because remember, I went short natural gas last week.
You did.
And track.
You would have made a little bit of money there. I think it was 264 last week when we were speaking about it. It's about 255 at the moment. So you made a little bit of money there. So keep on
short
going.
In the pops. It does look weak. It looks weak.
It is the widow maker. So yeah.
You're the yep. No, that's fair enough. That's why I'm not doing it with real money.
And oil's looked a little bit weak as well. So we've had
let's cross to sports. Yep, sell up on oil. Yep. I know. I've got a big fat multi on right now. Heath, why don't you start us off with some AFL, and I'll chip in with my NRL. All the tips that matter. What do you got for us?
Beautiful. I got back on the winners list last week. Port Adelaide at the line. They won it easy. Beautiful.
Yeah.
Versus North Melbourne.
I didn't.
I've got a tip for the last game of the round this week is simply the Bombers to beat Gold Coast up in Gold Coast last game of the round. They're paying $2.18. Then they're probably the most informed team in the AFL. Yet they're not favourites here. They're underdogs. So,
some people reckon it's been overdone. They're overrated. They haven't beaten anyone. They haven't beaten anyone good. They don't deserve to be in that spot. This will be a good tell. Betting the Suns at Suns this weekend will be a good tell.
Look, I think Suns are a little bit on and off. They're nowhere near as good a form as Essendon, but I think Essendon can do it.
The rich history
having
of
that type of season
in the Gold Coast. Well, I've got a whole bunch of things that's going on here, so let's just talk you through my multi, which I've got running right now. Obviously, I've got the Rangers plus 1.5 into the Timberwolves outright, so don't worry about that. But I like Newcastle, I like Penrith, I like the Dolphins, and I like the Roosters. I think that those are 4 absolute locks. Raiders, the only one that might knock over the Dolphins, but the Newcastle Knights into the Penrith Panthers, into the Dolphins of Gold Coast or wherever they are, into what are they called anyway? Into the Roosters, fantastic. Finally, by the time this drops, and I'm going to have to close it there because I got to roll.
Yep.
If you've got anything to add, otherwise I'd just like to just give a little note.
No, go for it.
A good friend of ours was lost, and this will come out. Maurice Farhad. This has affected me. Maurice Farhad, who was one of the old stalwarts of the ASX, everyone's friend, a great golfer and a great golfing buddy. We played once or twice for various corporate challenges. He passed away. That's now going through the market and a few things. He was just one of the legends. Sometimes you just have you have these people there. It just makes the industry worthwhile, makes everything worthwhile. We lost a friend. So thinking of you, mate. We'll raise a glass for you when it's appropriate to do so. But anyway, moving on. So Thanks, mate, for everything that you've done, and cheers for joining us today. Final bids, last bids, otherwise it's going to go. Thank you very much to Jai Ayoub for joining us with regards to the Australian Investment Summit. That's going to be an absolute cracker. What do you got for us, Heath? And then I'm going to close it off.
I'm going to go enjoy this rain.
Good on you, mate. Oh yeah, so it's West Australia, no rain. I didn't know how dry it was over there either. Incredible. Weird.
Yeah. Send some more our way, guys. Over on the East Coast, send some rain our way.
Yeah, I'll do that. All the things that I control, that's what it's going to be. I'm worrying about South Australian weather. Okay, mate. Thanks very much, everyone, for joining us. I'll talk to you later. Have yourself a great weekend, and I'll talk to you next week.
Have a good one.